Hi everyone. Just wanted to make a quick video update as I think it's easier to convey some of these things through audio as opposed to a written post. And in this case, especially, we've had a very interesting few days and then some more nuanced things happening. So I just wanted to be able to elaborate a little bit more and show you visually as well. So, what's been happening? Mostly these few days here were the days where we were short the NASDAQ and we had a very nice profit on that position. And the first thing that you might notice right off the bat is that these days don't actually look incredibly red. And that kind of brings me straight away to the main point that I wanted to bring to your attention, which is basically that the indices are being very, very heavily held up by just a few strong names. So, what's happening is that the inside of the indices, the guts, you can see this maybe more clearly in something like the Russell, um, have actually been declining. Actually, the best way to see it is probably, I don't have a chart right here, but if you look at the number of stocks that is under their 200-day moving average has been continuously increasing, right? Meaning that even though the indices are hitting new highs, most stocks are actually falling. So if you look at the stocks that had kind of been leading the markets for the last couple of years, like Zoom, this topped a long time ago and is on its way down. A lot of other popular names like Peloton, same kind of thing. Square, I recently shorted because this is a very typical kind of stage three topping phase, and it's just falling straight down right through this key support level and retesting it now, but I imagine it probably won't hold. So you have all of these stocks and the majority of stocks following this kind of action, and then only very, very few, such as Apple and Amazon and maybe sort of Nvidia, Facebook, Google, that are the only ones that are actually holding up. But because they're so big and they're such a high part of the index, so especially the NASDAQ in this case, the index looks healthier than it really is. And the problem here is that if these suddenly turn and start to roll over, then the index could just fall very, very quickly. So I remain kind of um, cautiously bearish, I would say, especially when you consider the new COVID developments, which was actually kind of minor, but mostly the potential for a rate hike. If we do see the Fed going through with that, then that's really usually a kind of nail in the coffin for the equities markets. But we'll see. But I just wanted to get this point across of I think the indices not being a fair representation right now of what's going on in the markets. So going back to my original point, that's why even though these days look like a very normal, sort of fairly minor correction, it was actually very, very ugly for a lot of stocks. Now, the other question or point that I wanted to address, I've seen a few comments about it, is around position management. When do you take profits? When do you not? And that this trade is a good example. And I probably want to zoom in a little bit actually. So I had shorted the Nasdaq, well, right at the top actually, but I think we took the profits somewhere around here, and then I shorted it again on one of these local highs. So that position was up sort of 40% or something down here. And then when you look at it in hindsight, right, when I ended up closing it somewhere around here, um, there were questions around why didn't I take the profits here, because they were much higher. So firstly, I'd say, you can only really say that in hindsight, because you never know um, if it's the bottom, right? So if it had kept on going down and we had had a market crash bringing the Nasdaq down here, then obviously you wouldn't be asking that question. But it's not only about hindsight. The real point here is that if you try and protect your short-term gains too much and take them too aggressively or too quickly, so take them here, like, yes, it was a good gain, but then you're capping your winners, which is really the opposite of what you want to be doing, right? You want to be making sure that you cap your losses and keep them as small as possible, but you want to let your winners run. So in this case, I'm willing to sacrifice that short-term profit. And by the way, we still closed the shorts at a profit. It was just a smaller profit. But the flip side of that is that the times when we do have a bigger move, we make an absolute killing. And you can see that if you look at my stats. That's where all my big gains come from holding these positions for a long time, even when people are saying, close it, close it. You can look at my cotton trade or Binance Coin or Bitcoin. Those are the months where we're making 20, 30%. And those are really what make the bulk of my gains. And you can only achieve those by kind of sacrificing some of these shorter term gains, by giving it a little bit of room. And in this particular case, right, you need to give it enough room, at least to, let's say, here, which would be the kind of trend line of this short-term descending channel, if we want to call it that. So you always need to give it enough room, right? You can't choke off the trade. In this case, I decided to take it there because it just looked it just looked too strong. And the other thing that I would say in this particular instance is that this was a really strong snapback rally. You don't usually see something that hard. And it also happened in the futures market, which is kind of unfortunate because it's overnight, meaning that I couldn't monitor it as closely. But usually you have more of a consistent downward trend, whereas this was a really intense rally. The question is, was it a relief rally due to the magnitude of how much other stocks had been dropping, or so meaning that there's still we're still in a downtrend, or was it a legitimate change of? Let me just turn this off. Was it actually a change, meaning a change of trend, meaning that things are going back to bullish? Now, as you know, I don't try to predict the markets. I try to be nimble with it. But to me, this just looks a little bit suspicious because of the aggressiveness of it, and also due to the fact that the volume was very weak. So you see, it moved heavily, but the volume just wasn't really there, meaning that it's not what could be considered a real follow through day, if you follow that kind of terminology. Well, for a bunch of other reasons as well. So we're kind of in a weird place, and that's why I'm holding a lot of cash. I just don't see many constructive stocks, and for the time being, I'm still sort of cautiously short. We have a small short position, but mostly we're just heavily in cash. But I'd say the main positions that I want to have right now are long crypto, even though that's been a bit shaky, probably just correlated to the markets as well. Bit of a liquidity crunch, and not necessarily short, but definitely very cautious on the indices. Having said that, if things turn around and the right conditions are there, I will go long again. I'm not worried about that. There just aren't many good stocks at the moment. I'll keep an eye on things. So you can see Tesla had a very, very big position in from about 800. We ended up taking profits here. And this looked like it was consolidating and it could have made another leg up. But you see here it kind of struggled and it's looking weak. But we'll see, if it tightens up and then looks bullish again, fine, we'll go for it. The other stock that I wanted to take a quick look at, which I think was interesting, was Apple. Again, because it's one of the few that is really holding things up. But here, it's a tricky one because you could see this as a sort of as a breakout to an extent. But to me, this actually looks more like a warning sign, because what often happens at the top of markets is that stocks that have been leading tend to suddenly accelerate into their sort of final blow off phase. So you can see for the last good chunk of time, we've been following this kind of trend, this kind of rate of ascent, and we're suddenly accelerating, which I don't know, it is a little bit concerning to me. But Apple seems to be the only one that's really doing that, because Amazon is sideways, Facebook is kind of struggling a little bit. Google looks a little bit healthier. I mean, if this suddenly takes a move up, we could go for it. But overall, Cloudflare is another interesting one. All these hot names were just taking a real beating. And I think this could be a very interesting and telling few days or weeks as to whether this was, Nvidia, another leading name. Was this a top and now we're going to roll over and break down, or is it just going to consolidate and keep moving? So yeah, just wanted to give you a bit of insight into my thought process here. And yeah, unfortunately, we've had a little bit of a drawdown, more than we usually do, or more than I want. But that's just how it goes, unfortunately, sometimes. I am, of course, always trying to do my very best, and I'm trying to be to share my thoughts with you as well. So hope that makes sense to you and that it's helpful. Please, if you have any constructive questions or comments, drop them under the video and I'll be happy to get back to you. All right, guys, take care, and yeah, have another update whenever there's some interesting change in the markets. Okay, take care.